Hey, welcome. It's Ben Orshak. Right now, you're watching me on YouTube, and some of you are listening to me on the podcast. For those of you who don't know, I have a podcast that's called The Upside with Ben Orshak. I've got links down below to where you can listen to it. And for those of you who listen on the podcast, you don't know, I do have a YouTube channel where I do, videos, property tours, different things like that. And the link for that is in the comment section as well. But on the podcast, I give you the daily snapshot of the real estate numbers and I just some other filler things that pertain to real estate. And one of those things was the Federal Reserve Board announcement at the end of October about them lowering interest rates. And I said I would do a podcast about it, tell it how it affected you and what it means. But it's numbers, and so I figured, let's make a video. Let's go to the whiteboard and let's do it that way because it's easier to conceptualize these things when they're written down. You may hear my 3-year-old in the background. We're just going to roll right along with it. Otherwise, this video will never get done. For Sunday, there were 17 homes that were recorded as being sold. Those ranged in price from $89,500 all the way up to $589,000. All right, and then there were 10 homes that were finally recorded as being sold in the MLS. Those ranged in price from $37,000 all the way to $700,000. We have 589 homes that are pending. Those will close November and into December. It's dipped below 600. We've been 600 or above for the past 3-4 weeks. I expect that we're going to see those pending transactions uptick a little bit more. A lot of activity in everything that's basically 220,000 and below. And then once you go above that range, it tends to slow down as far as how long homes are sitting on the market. All right, so that's your Pensacola real estate snapshot. Let me go ahead and just quickly erase this. And I want to get into the Fed, what they did, what it means for the economy, and what it means for you, okay? So as you may have known, the Fed, they lowered the interest rate. They went from 1.5 to 1.25. So they lowered it 0.25 basis points. And what that means is that if you are a saver, you probably already got the notice that the interest rate for your savings account is going down. All right. But as far as other if you have credit card debt, if you have different things like that, your interest rate could take a drop because of what the Fed did with that as well. So, look for those two kinds of things on your credit card statements, but also with your bank. You'll see how that plays out. Fed Reserve Chairman Powell, did give us some highlights. He did say that the Fed sees favorable growth for the future, and he says that what the Fed does now is going to be most felt further down the road, right? So in 2018, what they mean by that is, that the action that they take right now, the greatest impact of that will not be felt right now, but it's going to be about 6 months, into the future. That's generally how it plays out. They see that they don't feel that the reductions, so they don't feel like the reductions that they had for the interest rate will really be felt until the first quarter of 2020. All right, and the Fed is also starting to see lower income communities, and the quote is theirs, not mine, take advantage and participate in the benefits of the economy. And what they give as examples for that is they're beginning to see wages across the board go higher. They're seeing more job opportunities available to more people throughout the income strata, and there's more opportunity also for the wealth potential. And the Fed, they have no desire to kind of pull the rug out from under those opportunities for the economy as a whole and for the people as a whole, which is why they did not raise the interest rates this time. They also were saying that this may be the last time that they lower the rate. If things stay the way they are, they don't plan on it going down, anymore. And the reason for that is kind of what I want to illustrate to you, because it's also a clue into what the Fed feels it could be a real threat to the economy. Okay, so the Fed mentioned inflation, right? And they're seeing right now, on average, 2% inflation, and they feel real comfortable with that. They like that. They feel that it's good. It's not too high. It's not too low. When inflation goes up, people invest more. Okay, they're getting a better return, on their money. Debt becomes a little bit easier to service, and so it keeps the money flowing in the economy. They're saying that inflation at this moment is about 1.8. Okay, if they raise the rates, okay, they're afraid that inflation may drop, and they're not comfortable with that. All right, because when inflation drops, more people then begin to save money, and on the one hand, that's good, but the economy is based on the free flow of money. And so they're afraid that if deflation happens, what's going to happen is there's going to be this liquidity trap. And so they say, like, here is the river of money, and it flows in the economy, and it's great, and it's wonderful, and this is what you want to have happen. But if deflation begins to happen, people will hold on to that money, they'll save that money, and so then the happy river of money stops, and it begins to pool up. And so when this happens, all this money stays still. It stays right in this little pond here. And if money is not moving, right, if people are not buying houses, if people are not selling houses, if businesses decide not to expand with equipment, if construction companies aren't building things and doing capital expenditures and things like that, well, then that means that there are jobs that go away. That means that people there's not risk taking, there's not people making money. Everything kind of stays to a halt, or it begins to halt, and that's really what they're worried about, because they're seeing that a lot in Europe right now. They're seeing that the European market is on the verge of what they would say as a recession, and so the money is not moving now. People are not taking risks, they're holding on to things, and as a result, the economy slows down, everything begins to settle down, and it becomes stagnant. The Fed doesn't want that to happen. They are acknowledging that the economy is not as hot as it was, in the past, and certainly with home values and different things like that. We're beginning to see pockets now across the country where home values and buying and selling is slowing down a bit. Nothing catastrophic, but it's just returning to a normal level. But they're wanting to avoid that. And so that's the biggest thing that they're worried about is deflation. So right now they're okay. They're okay with it being in this 1.8, 2%, maybe even 3% level. But if it drops below that, that's when they feel there's going to be a real risk. So that is how everything is working out. That's what's happening. They're going to meet again, obviously, in the first quarter. We'll see how things go from that. There could be a China trade deal. There could be any number of things that happen in the economy that cause them to shift and pivot from their current position. And because I'm kind of a geek, I'll stay on top of that for you and let you know what that means for you right now. Hold on, sweetie, my daughter. So what that means right now, though, as far as how it concerns you, your credit card interest rate is going to go down. Your savings rate is going to go down. Mortgage rates, again, the Fed doesn't have a huge direct impact on mortgage rates, but mortgage rates are still going to be at a historic low. I've told you, it's a seller's market combined with really favorable rates for buyers right now. So there is a lot of activity in the Pensacola real estate market. Our economy continues to be strong. We've got some wonderful industries that are being developed right now. We have Navy Federal, who is here and expanding. Sacred Heart is expanding. Baptist Hospital is expanding. There's a lot of entrepreneurship, in downtown and just in the Pensacola area in general. So things are happening here, and overall, it's a good time to do business. It's a good time for whether you're looking to buy or sell a home. If you have any questions, email me, ben@keyimpressions.com. That email address is below. Social media links are below. And listen to the podcast. Reach out, though, if you have questions. I'd love to answer them for you. ben@keyimpressions.com. Hope you have a great day.